What is up, Canada? What is up, YouTube? Matt McKeever here, and today we're going to be talking about the London, Ontario real estate stats. So I wanted to update you guys. It's been a pretty crazy year in 2021. Earlier this week, we were talking about the craziness that is the larger multifamily properties here in London, with units being at least put on the market for $333,000. We'll see whether they actually sell at that price, but that certainly is a price that I'm not even sure if I ever thought I'd see that in my lifetime 10 years ago. But now I know that at some point in my lifetime, I'll likely see units in London selling for $300,000. I'm just not sure if it's going to be in 2021. So you guys can jump back and watch that video if you want. But today, what we're going to be diving into is all the stats around April 2021 here in London, Ontario. They came out, I believe, 2 days ago. So again, it's so important that we stay up to date on our data. I just want to hopefully encourage you guys to do this as well. So if you're in the London, Ontario market, great. But if you're not in the London, Ontario market, then do this for your own market, right? So again, just so important that you guys are actually paying attention to what's going on in your backyard. So let's get into it. And I haven't actually looked at these too closely yet. So we're going to be looking at it together. But right there from the thumbnail, we had, almost $1 billion worth of real estate, or almost at least $800 million worth of real estate sell in London, Ontario, from the MLS residential market activity, right? So again, this is just MLS residential market activity. So anything outside of that scope isn't going to be included in these numbers. And we've got a couple nice charts to look at as well. So again, if you guys want to look at some of the key data that I pay attention to, I really like looking at new listings as well as active listings. One, because that's going to give me a quick understanding of where we're at from an inventory perspective, right? So if our new listings are, I was going to say 1.5 thousand, but people don't talk that way. 1,500 or 700 active listings. Again, that's very indicative of what's going on in this market, right? And then if my sales activity was 1,200, again, we're looking at 0.6 months of inventory. This is a crazy seller's market still. That's definitely what the data is showing us. And the average price is now at $643,000, which again, blows my mind sometime. And then when we're looking at year to date, again, very high numbers that had you asked me 10 years ago, if I would have expected to see them now, I would have told you a firm no, but I also would have said that sounds cool. So let's actually look at the graphs here, because I think that this tells a great picture. Now, again, remember when we're looking at year over year data, so April on April, right? So this one right here in the corner, we do need to take it with a grain of salt, because April last year was still COVID, right? And it was the first lockdown of COVID. So business was particularly moving a lot slower compared to what it's been doing this cycle of lockdown. So I think it's important that we're taking this with more than just a grain of salt. But doesn't really matter which way you slice it. 2017 was the last time the market was really on fire. And we can see that, even during kind of a weird April, we were under lockdown for part of April, right? So during part of a lockdown again, we still had more listings than we've ever seen before, or more sales activity, sorry, I should say. And on the sales listing front, again, we've got a lot of new listings compared to the last 5 years of April's, but it looks actually a lot more similar to 2013 through 2015. And then looking at active listings, though, April only, this is where things stand out, right? There's just no inventory out there. 700 active listings is just wildly low for London. And months of inventory, again, being at 0.6. It just means that until we start to see really inventory creep up, I expect a lot of pressure on prices, right? Supply and demand is kind of the basic thing they teach us in, Econ 101. And, the composite benchmark price and average price, just kind of shooting straight up there. It's been a crazy ride since pretty much since 2020 started. Then looking at the sales activity year to date, again, telling a very similar story, right? So we still have months of inventory is so low compared to everything else on the books. And again, understand that the last few years have already been a very hot real estate market overall. And this is really compounding things when we're looking at what's going on today in London. And We'll bring up some of the multifamily listings here in a second for you guys, just to, again, kind of go through quickly. Though I know that or maybe I did that on cashflowtribe.com, actually. Maybe that wasn't with you guys. But looking through here again, just at the single family market. So for anyone just looking to buy that dream home or maybe a single family rental, again, not a lot of promising numbers here if you're looking to be a buyer. Though if you're looking to sell, this is a very exciting time. We'll come back to that in a second too. I think that this is honestly the point where you need to be evaluating your portfolio as an investor. Actually, maybe I will just start right here. We'll stop the screen share for a second. So I really do think that this is a great time for a lot of investors to be reevaluating their portfolio. If you guys haven't heard me talk about it, my portfolio is technically always for sale. Now, that doesn't mean that we're actively marketing it or that you're going to find it on realtor.ca or the MLS, or I'm going to be sending it out to my wholesale email list. But that does mean that, yeah, we actually are always willing to sell the properties we own. In fact, me and my business partners, we actually meet every quarter and just kind of discuss high level, the direction of the business. We do a what we do and what we don't do list. We talk through a few other key aspects and key strategies and benchmarks, and check out our KPIs over the last 3 months. But one of the other things we talk about is, what's I always call it the FU price, or like where you just like, yep, I'm going to fuck off and just like, sell everything I own. For us, going into the start of this year, it was $175,000 a unit. And I thought that was kind of a fuck off price. This has been an interesting year, and we saw a huge group of buildings. Now, they were likely a slightly higher class of buildings than what I own, but not significantly in the same grade. Just maybe theirs is a plus and mine's a minus. But that being said, they were able to sell their, I forget if it was 500 or 800 unit portfolio, but they were able to sell it for about $180,000 here in London. And so again, that immediately caught my attention. I was like, maybe we could actually sell some of our apartment buildings. So we actually are softly starting to float out the idea of selling one of ours. I don't think that we're going to be actively marketing anything outside of that one apartment building. But in theory, if anyone just wants to slide into my DMs and offer me a blank $200,000 per unit, I will absolutely sell you every apartment building I own. No questions asked. I would be more than a happy camper there. And it's important for each one of us as individual real estate investors to also understand that, right? Because you may have had one plan and the market may be adapting or evolving or reacting faster than you expected. But if you can take significant profits right now, and depending upon the situation you find yourself in, it may even be more beneficial if you're concerned about future tax consequences, right? We're seeing the US proposing potentially higher capital gains tax. It wouldn't shock me to want to see the Liberals follow suit, right, in Canada. Again, this is pure speculation. Now, they, in their last virtual caucus, which we covered, or whatever party meeting, whatever they call it, right before the budget, they said that they weren't going to do it. It wasn't in the recent budget proposal. But again, it wouldn't shock me in the next 5 years to find a political party in power that chooses to go after capital gains, particularly as we continue to see a lot of digital assets and currencies and things like that gaining momentum. I can imagine because of the nature of those, there's not going to be a lot of direct dividends or distribution, so that maybe this is a whole separate video I need to do. But so there's not necessarily going to be the same sort of tax base there. I expect that the most of the tax base in the crypto space is going to be capital gains oriented. And again, if we see a significant amount of capital move into that space, I can understand governments wanting a bigger piece of that pie. But this is pure speculation on my end. But again, that might be one other reason that you decide to maybe rebalance your portfolio. This is something stock investors are very, well, actually, this is something stock investors used to be very familiar with. I think it's fallen out of vogue recently, but the idea of rebalancing, right? Probably a lot more common with index fund investors these days is the concept of rebalancing. And I think as a real estate investor, it's not completely unreasonable to look at your portfolio and ask yourself, do I want to rebalance my real estate portfolio as well? I think that for those of us here in London, it's a reasonable time to be asking that. And for those of you that maybe haven't been following me on my Monday night lives, where we often kind of get off into the weeds and talk about anything and everything, I've been selling off all my small multifamilies for about the last year and a half now. And in fact, I think by the end of this September, I won't own any properties personally, and pretty much all the real estate I own will be apartment buildings that I've bought in the last 2 years. So for me, that's a transition of business model, but also just a natural rebalancing where I saw a lot more pressure on price, at least initially 2 years ago, on small multifamilies, and decided to move into larger apartment buildings. Now, there's other reasons and logics behind wanting to move into that business niche as well, but that was one of the factors. And, again, we were planning to do this for probably 5 years, maybe even 10 years, building out this apartment business. But hey, if someone was just to slide in, offer us 200,000 a unit, we would absolutely sell at that price. And you guys should know what price you would sell your buildings at as well. And again, even if you bought it yesterday, someone was willing to come and offer you double for it, unless you had significant plans to increase your potential margin further, understand that's a crazy ROI. So if you bought a house back in 2018, 2019, early 2020, or right at the peak of COVID craziness in like March or April of 2020, if you're looking at a 30%, 40% gain on that multifamily property, I'm just going to say I would be tempted. I'm not saying that you should sell, but I would definitely have a serious discussion with myself, my business partner, whoever is a stakeholder in that financial decision. But you should be asking yourself these questions because the market has likely changed significantly since you last invested. And I would hate to see people not understand the opportunity cost, or essentially the baked in margin or profit that they likely already have to this point. The idea of seeing the market continue to appreciate at 25% a year, let's say, or 20% or 10% even, for an extended period of time, I guess is difficult for me to grok. At the same time, I do understand that printing press goes burr. So definitely we seem to just, Canada in particular, is just going wild on the Bank of Canada acquiring assets as well as deficit spending from governments. So I do understand the desire for flight to real estate or other asset classes to protect yourself from inflation. And that is a very serious concern. However, that also doesn't mean that you can't sell, take profits, and then redeploy into another asset that maybe you've got a greater upside or potential in now. Because I think that there's certain properties and certain asset classes that irrationally are being bid up. Like there are multifamilies, maybe it's at $333,000 a unit, that I can't comprehend how you could cash flow on that property. The expectation that just hopefully someday we'll cross our fingers, sell it to a greater fool for more money who also doesn't want to cash flow. It's not a business model I would say yes to on the pitch, I guess is what I'm saying there. But you guys can let me know what your thoughts, your opinions are in regards to everything going on in the London, Ontario real estate market. Because as I said, it is a crazy year. But when we're looking at sales activity, April year to date, we can see that, in the last 10 years, we set a record for total sales activity. As far as active listings, well, again, we set a record, but for having essentially no active listings. Like when you actually think about that, 420 is I believe this would be considered single family. Okay, yeah. So this is single family active listings, 420 versus the next lowest is 840, right? Like you're literally double. So we literally have half the inventory of the lowest we've had in the last 10 years. That's saying something. Same when we're looking at 0.6 as far as months of inventory, right? The second lowest in the last 10 years is 1.4. Really important. Yeah, I see someone said MMT go burr. That is definitely true. And then, not that we necessarily spend a lot of time in the condo space here, but you're going to find a very similar story overall. High sales activity, low inventory. Now, it's not nearly as disconnected to previous years and previous experiences as with single families, but again, it's still very low. We're still at the low end of the range. However, it does seem like this could actually even be potentially more pressure, just because when we do have such low numbers, a slight shift one way or the other can really impact the market's demand here. And that's kind of what we're seeing here when we're looking at average price, right? Average price really shot up in a much more significant manner when it came to the townhouse benchmark compared to our single family here. So again, significant, but not necessarily quite as vertical. And I think part of the reason for that is just such low supply that if a few properties get bought up in a short period of time, particularly if they're at the lower end of the price spectrum, which oftentimes that's where first-time home buyers, as well as FOMO buyers, the people that are just scared that they're never going to be owning a property, those are the sort of properties that they target, right? And I don't know when this exactly would have been. I think this was probably October. But in September and October of 2020, that's when we really started seeing the market heat up on a level that I haven't ever experienced here in London. And I've been playing around here for, I say 10 years, but it's actually about 10 and a half, going on close to 11 now. So again, when we're looking at the apartment activity, very similar story overall. Actually, I'm a little bit shocked to see the sales activity was that strong. But it looks like at least new listings are helping balance that out a little bit more. But again, it's one of those things where like an extra 10 or 20 properties being bid up because of FOMO buying in 1 or 2 months can all of a sudden push the expectations of all of the sellers into a different spectrum. And because of the nature of that, and because of the nature of that small supply, again, we can see some crazy spikes and valleys here. So I guess for those of you that are particularly looking at condos, whether it's townhouses or apartments, I think my unsolicited advice here to at least consider is avoid the FOMO buying. I think that this low inventory can really manipulate prices in the short term. And that's not to say that prices won't continue to go up, but I just think particularly if you're playing in this space with FOMO buying, if you emotionally got into it, I imagine you're probably going to emotionally get out of it, and it's not going to be a fun ride for you. But either way, we can see that just in general, I'm sure, Peter, this has nothing to do with us, but I did start my YouTube channel in 2016, didn't I? So can I just take credit for, well, actually, no, there'd probably be blame. More people would probably blame me than give me credit. So let's just assume that that's an accident, that I started my YouTube channel right in here. But again, there is so much data here, guys, and I'm always shocked by the very few investors that will actually spend the 20 minutes to go through this, right? Like, I've been kind of goofing around here. We're chatting a little bit. I'm not necessarily focusing that much on doing my hard analysis. But again, this has been less than 20 minutes. If you can't do this every month as a real estate investor, you can't real estate invest, straight up. It blows my mind that people don't want to spend a little bit of time and get familiarized with what's exactly going on in their market. And again, what's great is we can always dial into even more specifics, right? So this is London specific. And if I keep scrolling, we'll eventually get to the different counties. So you got Elgin. I believe St. Thomas will be broken out here separately for us. Maybe not. It's been a while since I went look at. Yeah, I think we will. So you've got Strathroy there as well. And again, like, understand some of these markets are very small, right? Like Strathroy, active listings, 25. So like, that means that like, it can just be, that moment in time, if you're panic buying and, 5 extra buyers are panic buying with you in the Strathroy market, that can actually like impact your ability to buy, right? So like literally you and your 5 buds sitting around you're not allowed to sit around the shop anymore in Strathroy and drink beers, and you can't even find a buck of beer anymore either. Not that I actually care about that shit. That shit's stupid. But although, again, beer's not that expensive to make, so it should actually be way cheaper. At least companies should be capable of selling it at a cheaper price. But, rules and regulations have unintended consequences. But in theory, if you and your 5 buds were illegally sitting around together chatting, and all 5 of you got scared and decided to go out and buy a property together in Strathroy, or like separately in Strathroy, you would literally potentially move the market. And that's why it's just so important that you avoid FOMO buying in these low inventory markets, because that's how you get wrecked. Again, not saying that's going to happen, but it's smart to be prudent at this stage in the market cycle, in my opinion. Again, that's just my opinion. It's worth exactly what you paid for it, which is nothing. So again, you should always be doing your own due diligence. But like I said at the start, it just shocks me the lack of real estate investors that actually go do that. So hopefully you guys got some value from this. If this is something you'd like to see on a regular basis, where we sit down and just kind of chat through what's going on in the London market, let me know in the comment section, smash the like button, and Let me know what other markets should I be taking a look at, and what's your opinions and your thoughts on the London market in general. Are you buying? Are you sitting on the sidelines? Or are you selling? Thanks, guys, and we'll see you in the next video.